Dirty dealings, corporate battles, consumer woes. This is Evening 5. Sapura Energy has been served with a 50 million euro or 256 million ringgit arbitration claim from the developer of the Yunlin offshore wind farm project over alleged contract breaches. In a boss filing, Sapura Energy said the oil and gas engineering firm and its wholly owned unit Sapura Offshore were served with a request for arbitration from Yunlin Wind Power Co., which has made a provisional claim of 50 million euros for the alleged contract breaches. Yunlin has also reserved the right to further specify and expand its claims and claim damages for any damage incurred. Sapura Offshore was awarded the contract for the transportation and installation of turbine foundations at the Yunlin project back in March 2019, but pulled out in February 2022 following a purported undisclosed material breach of contract by Yunlin. When announcing the contract's termination, Sapura Offshore claimed that the project was initially expected to be completed in September 2020 but was delayed to September 2023 following unresolved technical and operational issues not attributable to Sapura Energy. In contrast, Yunlin, under its request for arbitration, claims that Sapura Offshore did not comply with the agreed schedule under the contract and accused Sapura Offshore of being unable to deploy the relevant installation vessels required to conduct the installation of certain structures on time. It is seeking 22.48 million euros against Sapura Offshore and Sapura Energy as delayed liquidated damages and 7.49 million euros as further proven damages. Yunlin is also seeking an award declaring that Sapura Offshore and Sapura Energy are jointly liable towards it for all further proven delay damages it allegedly suffered or will suffer in excess of 29.97 million euros for alleged willful failure by Sapura Offshore to comply with the contract. Sapura Energy is required to respond to Yunlin's request for arbitration by March 7th or request for an extension. The company said it is currently seeking legal advice from external counsel on the strengths and merits of the claims. Singapore is to channel investments such as data center projects into Sarawak under a proposal by the state to sell excess energy to the Republic, according to Sarawak Premier Tan Sri Abang Jo Johari maintained the timeline of 2032 for the completion of a proposed undersea power cable so that Sarawak can export renewable energy of up to a capacity of 1 gigawatt. It was reported last year that Sarawak has an energy generation capacity of 5.75 gigawatt versus demand of 4.27 gigawatt. The supply is targeted to rise to 9.5 gigawatt by 2032. According to Sarawak's Public Communications Unit data, the undersea cable will be direct from nearby Kuching, Sarawak to Changi, Singapore and will span 720 kilometers. Johari also highlighted the shift in Sarawak's focus on hydropower generation from the existing model of large-scale dams and to focus on run-of-river designs instead. Meanwhile, the Sarawak government plans to inject around 400 to 600 million ringgit annually into its newly set up Sovereign Wealth Fund, according to Johari. The fund, which has been officially set up on January 1st, has an initial seed funding of 8 billion ringgit by the state. The state government is looking for investment opportunities with additional funds that the state has obtained over the years, the Premier said. He adds that the annual injection also doubles as a means for the state government to save. Electrical engineering services provider HE Group saw an impressive debut on the ACE market today, opening at 43 sen, up 15 sen or 54% from its initial public offering price of 28 sen. It wasn't able to hold on to that momentum but still closed 16% up at 32.5 sen. It was the most actively traded stock on the bourse today with over 209 million shares transacted. HE Group MD Amos Ho Chi Seng highlighted the company's expansion plan to set up data centers in Johor, aiming to benefit from the establishment of the Johor-Singapore Special Economic Zone. Ho also remained upbeat about the outlook of the semiconductor industry in 2024, citing electric vehicles that would use high-end chips, as well as the current artificial intelligence wave. He added that Malaysia will likely continue benefiting from the trade war between the US and China due to political stability and a well-established ecosystem for the industry. As of December 15, 2023, the group's order book stood at 211.9 million, of which 90% is expected to be delivered by end 2024. Uzma's 70% owned unit Malaysian Energy Chemical and Services has won a contract from Hibiscus Oil and Gas Malaysia for the supply of chemicals and related services to the PM3 offshore fields over a 5-year period between November 16, 2023 and November 15, 2028. The PM3 Commercial Arrangement Area project is located in northeast Malay Basin, offshore Malaysia and Vietnam. The job scope involves the supply of integrated production integrity and water injection chemical and associated services. The value will be based on work orders issued by the client, said Uzma in a boss filing, adding that the contract is expected to contribute positively to its earnings and net assets per share. Hibiscus Oil and Gas Malaysia is wholly owned by Hibiscus Petroleum, which acquired a 35% interest in the PM3 CAA production sharing contract in January 2022, one of the 5 PSCs acquired from Repsol for $212.5 million. The Court of Appeal today allowed a judicial review by Hong Leong Yamaha Motor to set aside the 27.96 million bills of demand imposed by the Royal Malaysian Customs Department on the company. This followed a unanimous decision by a 3-member appellate bench led by Dato' E.S. Natabalan in ruling that the High Court judge had erred in not allowing the judicial review. It was ruled that the Director General of Customs could not change the words on the schedule of the Sales Tax Act 2018, and this resulted in the wrongful charging of the BOD on the company. The bench also ordered the Customs Department and its DG to pay 20,000 ringgit costs. This is the first case of its kind regarding the sales tax, said Hong Leong Yamaha's counsel S. Saravana Kumar, saying that it would shed light on the law on sales tax exemption for manufacturers and powers of the DG of Customs. Hong Leong Yamaha is the franchise holder of locally assembled Yamaha motorcycles, which imports various components for the motorcycles and have them assembled at a factory. It received an exemption certificate issued by the department dated August 30th, 2019 in respect of the sales tax components. However, the Customs Department arbitrarily raised the BOD by imposing additional sales tax.